Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice day of trading and a very beautiful weekend as well. As per myself, currently traveling right now, so apologies for the different audio quality and different video quality, but the content will be the same. So in today's markets, guys, as a whole, the markets were doing fairly well. As we can see, the SPY and the QQQ putting in some nice gains, but once again, the market was not as broad as we would like to see. We'd been talking about this last week, how there was kind of a thinning out of the market, and the market was very top heavy. And today was largely the same. Big tech doing a lot of the heavy lifting and a lot of other major sectors getting left behind. So in today's video, guys, we're going to recap a few things together. Number one, of course, is going to be going over the data and the expectation for the week, because this week is going to be a supercharged week, one of the most intense weeks before the Christmas break holiday and into New Year's as well. So we'll do a quick little recap as per the expectation for the data. Then number two, we're going to go through our technical analysis rundown of our major stock market indexes, followed by the TA on our major big tech names, see whether there's some good deals either in some sectors specifically or possibly in the big tech names themselves, even though they have been running a lot as of late. And lastly, take a very brief glimpse into my portfolio for a few of the trades made today and some positions that I have remaining into the week. As I was telling you guys at the end of last week, I have a ton of buying power for this week, but I need to find good deals. I'm not willing to chase this market if I don't have to. Gonna sit back, hold my buying power, which is equivalent to cash pretty much, and wait for the market to come to me. But I did make a few small trades today, so we'll go over those at the end of the video. So without further ado, guys, let us jump right into it. So the SPY up a very healthy 0.43 and the QQQ's up a very, very healthy 1.44. However, when we take a look at the heat map, guys, you will once again see quite a top heavy market. Now, I'm not quite sure which portion of the map, the heat map that my head is covering right now, but let's get into it, right? Very large outperformance from some big tech names, Tesla, Amazon, Google, going on monster rallies today, Apple and Microsoft doing well, but we do have a little bit of a problem here with NVIDIA getting left behind, even though AVGO putting in another 11% day after their 20+% day on the Friday. It was not enough to lift the whole sector up in a broad market fashion. Financials still remain somewhat muted after they were very strong after the election. They've been proving to be fairly weak in the last 3 weeks worth of time, and healthcare, well, good old healthcare remains a pain point in the market. A lot of uncertainty around healthcare. Number one, because of RFK Jr. coming into the administration post-inauguration day, and we do not yet know what he's going to necessarily crack down on in terms of transparency for pharmaceutical companies. But then again, the Trump administration as a whole, we know that they've had a problem with the current healthcare, especially the healthcare insurance system in the United States for quite some time now. This was one of Trump's main focuses during his first term. As per what his policies are going to be in the second term, nobody knows. He hasn't been very clear as to what he wants to change in terms of Medicare and Medicaid. So the sector as a whole remains plagued by this uncertainty, and I do believe that will continue leading into the election, leading into the inauguration rather, and maybe perhaps even a little bit after, as we kind of get a sense of what those policies may indeed be. So that is a sector that I'm kind of staying away from now. Other than that, well, the bottom half of the market, guys, still remains a little bit weak because bonds still remain weak as well and yields remain high. A lot of these sectors are interest rate sensitive, industrials especially because they require very large loans to operate their businesses, real estate and utilities, well, de facto interest rate sensitive sectors right there. And energy still remains a little bit weak because we know there's a few catalysts coming into the market, especially into the Trump administration. He wants to drill baby drill, and although that is good for the price of gasoline for everybody and also for exports towards the rest of the world, it's not necessarily good for the price of the barrel of oil, right? That will bring the price of the barrel of oil down, and that's why oil stocks have been recently weak due to the incoming administration, but also, you know, fall and winter are traditionally a seasonally weak period for energy as a whole, just because it's very logical, right? In the winter, less people are traveling, less people are mobile, and you don't have a number of agricultural, industrial complexes that are moving throughout the winter, right? Although some countries, of course, don't have winter, but you guys know what I mean, right? A good portion of Europe and a good portion of North America as well, well, those are kind of sidelined. So the demand for gasoline is less, which is why oil is seasonally weak, especially in the winter months. So that's a big sector recap. You can see how mixed the day was in terms of the one-day performance, guys. Very mixed market. Cyclicals, communication services, largely led by Google and Meta, and technology all up higher, but the rest of the market remains a pain point. Today is pretty much the exact same day that we've gotten in the last week as well. A lot of big gains from big tech here and a few semiconductor names, but definitely not broad-based. And if we want to see the SPY continue on higher, we need to start seeing participation from the rest of the market. Unfortunately, right now, for value stocks, those have been the ones that have been hit the hardest as of lately, and they're kind of lagging a little bit behind. So moving into the technical analysis, well, actually, no, moving into the projections for the week, right? So today we got one manufacturing report from S&P Global, which came in under the expectation. Now, that's no secret. We know that manufacturing has been seasonally weak so far, but more than seasonally, guys, it has just been weak, kind of oscillating down here in the low 50s or high 40s for now the past year of time. And that is definitely not the best signal for the economy right now. The economy is still steadily moving forward, but manufacturing is a little bit of a complex topic. There was a lot of manufacturing output and supply that was built up after supply chains were broken in 2021 and 2022. And now that all that manufacturing output capacity is there, nobody is currently using it. So those companies are not necessarily hiring more. They built a ton of warehouses, they built a ton of capacity, but it's not currently being used right now because consumers are adopting more of a defensive nature and are very picky on their purchases. So that is why manufacturing is a little bit of a complex topic. It is weak, yes, but keep in mind, where the reason it's weak is because there was a lot of infrastructure that was built up when supply chains were bad, and now it's just not being used. So I wouldn't say this is a big red flag for the market right now, or big black swan for the markets, but still, it does go to reinforce one of the things that I was highlighting in my video a few weeks ago, right? One of the main points of the bear thesis is the fact that the economy can potentially be either mismanaged or just simply start falling off and starting to degrade. So we're going to keep a close eye on manufacturing outputs in the future, but this one apparently was not enough to derail those markets. So let's continue, shall we, in terms of the economic outputs. Well, this week is going to be a very big week, guys. Tomorrow we get retail sales, an insight into the consumer as well. If retail sales are weak, especially during a holiday period, now, of course, these are for November, right? But if the sales are weak in the month of November and possibly even next month as well, it'll go to show that the consumer is not as strong as possibly even Jerome Powell might think, and this could be a cue for more market declines. Now on Wednesday, that's going to be the biggest day of them all, guys. We have the FOMC decision by the Fed. The probabilities currently stand at about 98%. Let me just pull it up again. So they stand at roughly high 90 percentage rates right now in terms of the probabilities of getting a 25 basis point cut. And I do think that is still the same. Yes, it is 98% for a 0.25 cut. So it looks like we are indeed going to get that cut, but that is not going to be the largest point of the day. It's really the summary of economic projections. The Fed gives this once every 3 months, and we get kind of a timeline as to when they think rates should be coming down and what kind of the final terminal, neutral rate of interest rates should be. As you can see, the longer term right now is running at about 2.9%, which is okay in relation to what it is in terms of historical averages. But, if the Fed somehow changes the dot plot and we kind of increase these interest rates over time, so not only for the first year, but the second and third year, and your long-term rate, well, that would mean rates higher for longer. The bonds are not going to like that, but what is also not going to like that, guys? Equities are definitely not going to like that as well. So we're going to pay special attention to the summary of economic projections on the Wednesday session. Thereafter, Thursday, we get the final revised GDP number. Not expecting much change there. And then on Friday, we do get a PCE inflation report, which could also rock the market. So you can see, guys, there's a lot of data this week that can rock the markets potentially. So even though we ended the day green today, just keep it in the back of your mind, right? Possibly not the time to position extremely bullish leading into all of this data. I would rather sit back, let the data happen, see the market's reaction, and then position accordingly. So that is a bit of the outlook for the week. In terms of the earnings, well, we don't really have that much, right? Tomorrow we have Heiko, which is a defense name. On Wednesday, a few names coming out there, such as Micron and Lennar, one of the home builders. And then on Thursday, arguably the biggest day of the week, we do have Nike and FedEx, those of which I will be covering on the channel. I will be back home on Thursday, but very late at night, so possibly no video on Thursday, but I will do these on the Friday recap for sure. I'll do videos tomorrow, Wednesday, but Thursday is at that time I'll be flying, so most likely no video there. So hopefully you guys enjoyed that. Now, let's dive into the juicy stuff, shall we? The technical analysis. And to be quite frank with you guys, right, the SPY is not looking the worst. However, pay special attention to 602.22. This little area right there, those are your daily higher lows. And if we flush those, that would be the first daily downtrend on the SPY in quite some time, since the end of the month of October, as a matter of fact. And if we do start curling down, expect some support to come into play. 600 down to about 595 is the baseline of support. It is your 26 EMA as well. And as you can see, in the context of this bull run, we have tested and challenged the 26 EMA. And when the markets really get bad off of bad data, you can see that is the times in the past when we have flushed the 26 EMA as well. First time in August, then we had another one in October. So if this week of data is, potentially negative, the markets can embark on that process of deeper consolidation into that zone, and that would definitely not be good, but that is why I'm keeping all my buying power. The bulls have not lost any levels right now. As a matter of fact, on the weekly, we are still looking quite good, and I'll remind you, even if we do get some form of daily downtrend right there, this is annoying me, so apologies for that, guys. If we do get a daily downtrend into the flush zone right there, just keep in mind, what are we looking for in the higher time frames, guys? We'll just always be looking for a weekly higher low for possible further trend continuation. And the bulls have tons of space. Anything above 585 is just looking for that weekly higher low. So as of right now, no major red flags, but this week will be the largest week for catalysts to potentially send us into further daily consolidation. Moving into the Qs now, well, obviously when the heat map looks like this and all of your big tech names are running, the Qs are going to look quite fine, and that is indeed the case. Daily uptrend is more than confirmed right now, looking extremely strong. We're coming into a little bit of overbought conditions. I don't know because I don't have two screens. Maybe my head's in the way, but here you go. Daily overbought conditions are slightly being touched right now. Nothing crazy, but it's just something to keep in the back of your mind, right? We may be getting a little bit extended right now. Daily uptrend is fine though. Looking for a possible daily higher low for possible further trend continuation. So any pullback still are for daily higher lows. Now, in the event you lose the sequence of patterns and roll into the daily downtrend, that is when you'll find some weekly consolidation, and it will probably follow the SPY. If the SPY loses the daily uptrend, I would not be surprised if the Qs take it upon themselves to consolidate as well. And if that does happen, if we do come down into weekly consolidation, well, the closest area of support below us here, guys, is quite a ways away, 515 down to about 510. It's not the strongest area, but it's the closest one we have. Of course, the biggest one is down here, 500 down to roughly 495, but we're not expecting a revisit of that location, at least not in the short term. So we'll keep our eyes peeled for this one, but the Qs are looking good. Now, if the Qs start pulling back hard, because we know big tech has run a lot, and we'll cover those names in just a few short moments, we need the rest of the market to participate, guys. The rest of the market that has been left behind so far in this process of having big tech out. This is the last week of trading. Right? If we go back to the 1 month, it arguably looks the same. Very top heavy market and lack of rotation into financials, healthcare, industrials, and the bottom half of the market. Now, when the Qs decide to pull back, because they will pull back eventually, we need to see financials and healthcare start coming in, because those are the two biggest other sectors of the entire market right now. So financials right now, daily downtrend is continuing, and we're about to flush these lows, guys. 49.30 is your last line of defense. Flush anywhere below that, and the next stop is the 50 EMA, which is about 48.80, right around here. And then also that is corresponding to a slight little retest level down there. But if we start flushing, guys, the gap fill is possibly on the table, and we would just still be looking who's in control here. The weekly uptrend is gorgeous right now for the bulls, and we just be looking for a weekly higher low. Sorry, that line is disgusting. Looking for a weekly higher low for possible further trend continuation. Yes, I have a mouse, but I don't want to. You guys can probably hear that clicking, right? And I know audio is important, so I don't want to do the clicking if I don't have to, so I'll just use the trackpad for now. So looking for a higher low, guys, anything pretty much above this level right here, 46.20, looking for a weekly higher low for further trend continuation. One little stop down here is the 12 EMA. We have not lost the 12 EMA in a big fashion since the Black Monday event in the month of August when the Japanese carry trade unwound. And that is going to be the next area that we're going to keep our eyes peeled. 48.70 on the weekly. And funny thing, that is exactly this line of defense right here, right? 48.70, that's the support, and it's the 50 on the daily. So a lot of confluence down there. We'll see if the bulls can play some defense. We definitely will need them to play defense if the QQQs start pulling back after their monster rally. Moving into healthcare right now, well, healthcare, guys. This is why I'm not playing healthcare right now. There's just too much uncertainty around the sector. That being said, weekly downtrend is fairly obvious right now. The sequence of lower highs and lower lows is quite evident. That being said, we're coming into big support, and I'm glad you asked what that support is. It is the highs of 2020 and 2022 through 2023. About a year and a half's worth of resistance is now going to be acting as support for the bulls, but they are coming in hot into this location, guys. So even if it is larger support, I'm still not playing the sector just to the uncertainty surrounding policy, because this policy is very important. In about a month's time, we're going to get the data that we need to position for the next 4 years. So I would rather wait one extra month before playing this sector and have clarity on what's going to happen for the next 4 years. So hopefully that makes sense, right? So yes, monthly is currently losing the levels right now. The last line of defense, 138.38, and we're almost there. If you lose that, you lose the monthly uptrend. I'm not saying we're going for something like this, but possibly just, establishing somewhat of a tightening range before we get more clarity on that policy is definitely possible on the monthly. The weekly is coming in hot, but still not weekly oversold. I'll move my head over so you can see. Still not weekly oversold, but daily is coming into daily oversold conditions right now. So we could be expecting a bounce soon, but the bulls have a lot of work to do, guys, before resetting the daily uptrend and then possibly going for the weekly trend change as well, right? You guys saw they tried it here and it didn't work, right? So we'll see if they can get it done this time, but still a lot of work left for the bulls. Now moving on to semiconductors. So semiconductors also not looking too bad today, but they're doing it without their star player. Now you can argue, right, that possibly AVGO is the new star player of the sector, and it does have a decent amount of weight to it, but it does not have the weight that NVIDIA has. NVIDIA is 3.5 times a larger company. So, it's been doing very good. NVIDIA's, this is the 1 day performance, right? So it's doing all of this rally without the star player, right? That's like a basketball team, going into the championship finals and they don't have LeBron James. LeBron James is just on the bench, right? So you can imagine if they bring LeBron off the bench, well, then, you're probably going to get that breakthrough rally. So NVIDIA holds the key to the semiconductor industry right now. I will stay firm on that point, and I have been saying that for about 2 weeks of time at the current stage, right? So daily uptrend now is back to the bulls, but keep in mind, we're working against resistance right now, all the way up through 260. It's been an area that has plagued the bulls for, let's call it, for all intents and purposes, the last 6 months. So can they get it done? Can we form a new weekly uptrend and close a weekly candle above 261? Well, this week and into the next week will be the deciding factor for that. If they can put together some decent weekly momentum, guys, on the weekly for the next week, 2 weeks, this MACD down here is crucial to watch out for, because that will mean the bulls are coming into momentum. Now, what is another chart that had a weekly tightening range trapped between 2 levels where the MACD was on the verge of crossing, and then when they did finally break out of it, the MACD did cross, which gave us further follow through continuation? I'll bring up this one and you guys can see, right? There's the MACD all the way down there. Here's the tightening range trapped between 2 levels. There's your weekly expansion, and here's your MACD, right? So does that make sense? This eerily reminds me of Microsoft. That being said, we are still trapped pretty much between 2 levels. We'll keep an eye on the bulls, but what I want to see, guys, is closing above this level on a weekly time frame to let us know that indeed institutions and retail alike are starting to bid higher the semiconductor trade. The guidance of all these companies so far in the last 3 months have been fantastic for 2025. So do not forget the thesis that the infrastructure build of AI and data centers is definitely going to continue ramping up into 2025. As a matter of fact, we can go through a few companies, right? Well, we'll go through them when we go through AMD and NVIDIA, and I'll show you guys what I mean. So moving into the Russell right now, the Russell currently up about 0.59% today. Not the worst day for the Russell. I mean, they did this in the face of a rising. Well, now they're not rising, but the day prior that just closed, they did that in the face of rising yields, and they also did it in the face of unfavorable sector allocations. I'll remind you, I bring up this thing every single time. The Russell is like the S&P 500 of small cap stocks. There's 2,000 stocks in there, and they're not only unprofitable technology companies. Financials, 17%, industrial 16%, healthcare 16%, tech is number 4 at 14.7%. So that being said, it's very impressive that the Russell, even in the face of rising yields, which is not good for small cap companies, because the longer that these stay higher, the higher the cost of borrowing goes for these somewhat unprofitable companies, right? It's very impressive that the Russell was able to put together here a 0.6 gain today, despite rising yields and despite overall sector weakness in some of its biggest allocations. So that being said, the Russell is not looking too bad right now, trying to find a baseline of support. Support stays put 232 down about 225, and that is a very big level, guys. It's a huge level, as a matter of fact. It is the previous resistance from all the way up here, 2020 and 2021. That is now going to be acting as support as we blasted through it. We're now coming into the retest location, and it's not looking too bad. That being said, it is currently a daily downtrend. The expectation is just now for a lower high into lower low. Now, what the bulls need to do is they need to get as high as possible in relation to our last leg of selling, which is 239, get me as close as possible to this, and then we can talk about possibly recapturing the daily uptrend and possibly putting in motion a weekly low and going for weekly trend continuation, because the bulls are deeply in control of this weekly time frame and coming into a nice support and the 12 EMA too. So you have a lot of confluence here. Can the bulls get it done? Well, we'll just have to take a look here, but it's looking not too bad, guys, for a little bit of a positioning. I would go a little bit light though, not financial advice. I am going light myself just because that the fact that the market is not very broad right now, and we need more broad market participation for the Russell to also come alive. Moving into the Dow Jones now. So the Dow Jones, same concept, right? The Dow Jones now putting in its 1, 2, 3, 4, 5, 6, it's 8th red day in a row, guys. This has not happened. I mean, back here in May, there was like 6 red days in a row. Back here in April, there was also about 6, 7 days in a row. But this, in my humble opinion, is the worst stretch in the Dow Jones since last fall. And that is saying something as well. So the Dow Jones not looking the best right now, admittedly, right? We are still looking for a daily higher low for possible further trend continuation, but the bears have taken back a lot of this move. So it's very possible that it's not possible. The higher lows are here, 42,900. What I was about to say is it's possible that we may have to two-step recovery process this when it does come time, because as we take back more and more of this move, guys, the V-shape starts to become more and more unlikely. So a two-step recovery process, yes, possibly. We are not even close to being daily oversold right now. If I move my head to the side, you could probably see that. Not even close to being daily oversold. And the next big area of support is indeed down here at 43,000. There is nothing between us and that except for the 50 EMA. And the bulls have played some nice defense, I can admit, on the 50 EMA a few different times throughout this rally since the month of July, essentially. But if we break it, they broke it a few times, especially in the month of August, right? If they do break below it, at least we have this very large area of coming into support, which is pretty much 43K all the way down to about 42.5. So that's it for your sector recaps, guys. Hopefully you enjoyed that. Now let's dive into a little bit of Bitcoin, because Bitcoin is really pushing the levels right now, guys. Bitcoin looking very strong. So we know that the context is this perpetual daily uptrend. The bulls are looking very hot right now. And any consolidation whatsoever looking for a daily higher low for possible further trend continuation. Now, we've established a very nice area of support, which is the breakout zone, right? This was the breakout zone. Let me just adjust this box. So now it's a breakout. If we start retesting, guys, that is literally around the 100K mark. So this would just be a breakout, retest, and possibly run. That could be one type of trade that we're looking for. I mean, use your desired tools if you're trading BITX, if you're trading IBIT, if you're trading MSTR, if you're trading the miners. They all move in relation to Bitcoin, right? And take a look at this daily MACD. Daily MACD is now crossing, guys. It's been kind of stuck there. Even though Bitcoin's been going up, the momentum of Bitcoin has been roughly flat or down. So now we might be able to see another very big leg in Bitcoin, and the weekly uptrend would support that bias, guys. This is just one single very large move up on the weekly, looking very good. Overhead resistance targets stay put at the round numbers, 110, 120, 130, etc. So Bitcoin is looking very strong. However, I cannot say the same for the altcoins. You can see Ethereum here struggling a little bit with the previous highs around 4K. So in the event they pull back, looking for a daily higher low for possible further trend continuation. And this higher low is about 39 down to about 37. Not too bad if you ask me, right? We are closed above this current previous area of resistance near the previous 52-week highs. So now it's not looking too bad, to say the least. We do have a little bit of space, but in terms of Bitcoin dominance, you can see the altcoin list in the list right there, right? Look, the altcoin rally was started, and now Bitcoin dominance is taking back over. What you need to see is a lower high and then proceed into lower lows for Bitcoin dominance to come down. As a whole, this just means that Bitcoin can stay flat or go up a little bit, but altcoins need to rally faster. So far, we had a very beautiful 3 weeks of altcoin rallies, and I do think that this is a very good chance of following through. But right now, you can see Bitcoin is leading, and my whole list of altcoins has been pretty much red for the last roughly 3 days of time. Just take a look at the dominance, guys. All of this period, right? The last 3-4 days has not been good for altcoins. So until this Bitcoin dominance chart finds its daily highs and reverses into a new daily downtrend, proceeding into weekly continuation of the downtrend, the altcoins will be a bit muted, but this could be a good opportunity to reposition in the altcoins. Just please don't use too much leverage, guys. Leverage is very dangerous, especially in crypto. So that's pretty much it for crypto. Let's move into our big tech name, shall we? Let me just check the time of the video here to see if I'm not talking my bum off. Not too bad, actually. So moving into Apple, up about 1.17%. Apple has just been super, super strong, guys. Looking very good as a whole, right? So if we can see, guys, daily uptrend is clear as day right now, looking for the uptrend continuation, and they are getting it. The most recent daily higher lows are here, 241.63. They're not higher, guys, because we never lost the daily uptrend. Notice, we have never lost the daily uptrend into daily downtrend follow through. So all of that is simply, this is just sideways consolidation, but it is still part of the same leg higher. So this is one leg consolidation, 2 legs, and you can see the consolidation there. That was the only period in time where, in effect, they did lose, all but temporarily, the daily higher lows the hourly higher lows into hourly downtrend consolidation. It lasted a very brief moment, but it was there. So the daily higher lows are firm at 241.81. Any pullback going to be looking for a new daily higher low for further trend continuation. But keep in mind, guys, look at the RSI on Apple, and you'll notice that a lot of big tech has this exact same concept on the daily timeframes. Look at the daily RSI on Apple. It is clipping into 78. Apple is not Palantir. It does not usually stay this overbought for a very long period of time. Just go back in history, guys. This is 2 years worth of data. You can see even in the best rally modes for Apple, it does not stay 78, 80 RSI for a very long time. So keep that in mind. If Apple starts its consolidation and loses the daily uptrend into daily downtrend over the next 2 weeks of trading, it'll free up one of my favorite trades, which is quite simply the breakout of the all-time highs, retest the previous all-time highs, and possibly run. That retest location is down here, 235, down about 230-ish, and that would be a very nice level, guys, if the QQQs take a little bit of a breather, because they always need to eventually, right? A little bit of a breather could be a nice opportunity for a swing trade on Apple, but I'm definitely not chasing it up here. I'm holding my long-term shares, but I'm not adding any more per se, guys. The valuation of Apple right now is extremely expensive. It's about a 3.5 peg, and the revenue growth is somewhat flat. So, you know, the risk reward is not very favorable for the company right now. The valuation is not also very favorable. So that's why taking a technical trade up here, probably not the best setup. I will be very patient, and if I don't get it, well, there's tons of other opportunities in the market, of course. Moving into our other big tech names, AMD, and I'll be honest with you guys. I think it's almost time, guys. It's almost time, right? SMH, if they can do it, if they can close, they can start curling on this weekly as well, and NVIDIA also starts curling. I do think, guys, that it might just be time for AMD very soon. I've been exploring this trade with our Discord members for about a week and a half right now. We've been very patient, and I do still have some a short put position open, which I'll show you later in the video. But you guys remember I opened this one, the 120s last week for January the 10th for about $3. So I am slightly positioned, but only with short put and only farming premium. I do not have any long calls, but I am possibly looking into the opportunity for some long call options, because I mean, it is absolutely crushed right now, and the valuation is extremely attractive. 1.07 peg at the current price. They're growing revenue and EPS very quickly. It's just sentiment around the company right now is very low, both from retail and possible institutional positioning as well. So that is the time, guys, usually when it does open up a buying opportunity. I'm not saying that we're going to recover like this in a straight line, right? But can we possibly be forming some sort of a bottoming out process into possible growth into 2025? Well, the bull thesis for AMD definitely will support that. I'll remind you, their data center ramp. Look at the price targets for analysts. And the data center ramp is real, guys. Look at this EPS expansion through 2027, and look at the revenue expansion because of that data center ramp. The revenue is going to absolutely explode as well. So the valuation is very cheap. The sentiment right now is arguably at rock bottom lows. These are the opportunities, and even the daily RSI. I mean, it's not quite oversold, but it is quite low right now on the daily, and even the 4 hour has been oscillating oversold. The 1 hour has been oscillating in and out oversold. Now is kind of the time where wouldn't be a bad proposition to possibly build some positions in this company if you do like the company and if you have a long enough time horizon, right? I'm not saying load up on the next 30 days worth of 30-day calls type of thing, but contracts with some time on them do have a very attractive risk reward profile right now. So I will be exploring that possibility. And if I do make a trade, I will let you guys know. That being said, daily downtrend is fairly obvious as well, right? So the next leg is here, 131.85. If you want to see the bulls put in a little bit of a recovery mode, need to see a new daily uptrend shift, and only then will you know the weekly lows are in. And then we look for the same thing, guys. Since we're in a weekly downtrend right now, we need to see the size of the bounce on the weekly in relation to 142 and reset this weekly uptrend. I want to see them recapture this area of weekly support. We haven't really lost it as of yet. It's very debatable right now, but we need to recapture it in a big way, right? Give me a nice engulfing move, recapture this bottoming out zone, 141 down to 125-ish roughly as support, and then we will form a much nicer base. We'll be able to establish some stop losses for some swing trades, and AMD will be performing, or will have a better chance of performing better as long as they can get the daily uptrends back and a semblance of a weekly push back as well. But right now the stock is still very, very weak, but could be an opportunity if you are a fan of this company. Now give me a quick second as well. It wouldn't be a video without coffee, right? So moving into Amazon right now, I mean, Amazon, 2.4% to the upside, looking extremely strong today, 233. Next stop, essentially, guys, you guys know, round numbers, right? 250 is going to be the next stop for Amazon right now. Nothing to say about this chart. I mean, they formed the daily higher lows. It's pretty much clear as day, this whole range right there. Even though if you want to be technical, the daily higher lows are here, 225. I would bunch them up with these guys right here, right? Which is also coincidentally lining up with the 12 EMA, this yellow moving average, which is just curling up into this zone. Looking very strong on Amazon, guys. No red flags whatsoever. But if big tech chooses to consolidate over the next few days, next few weeks with bad data, and we roll this daily uptrend down into a daily downtrend, well, you guys know the drill. What are we looking for here? Well, the bulls are in absolute complete domination mode of this weekly time frame with a lot of space left for a weekly higher low. So even if we lose this, guys, looking for a weekly higher low at this point, anything above 195, going to be looking for a weekly higher low for further trend continuation. And if we do start dipping on that weekly and get this weekly 12 EMA starting to curl up, 220 down to 215 roughly, I will be increasing my allocation and swing trade positions into Amazon because I think they're going to have an amazing 2025. Their margins are coming up, guys. Amazon has never done this before. I'll keep repeating it, right? They have never focused on bottom line profitability. Amazon has just put in a few of their best profitable quarters of all time as they continue to focus on shareholder value, growth of EPS, growth of free cash flow, growth of net margins. Those are all things that Wall Street absolutely loves. And as you can see, the share price now is climbing rapidly because of those factors. It's not because Amazon has changed the way that they do business or whatnot. It's the focus on profitability. That's what Wall Street has been wanting for a long time. And now that they're getting it, you can see a little bit of the institutional FOMO into Amazon. Moving into Google right now. Well, Google clipped into the $200 range today, looking very, very, very strong, 3.54% as they continue to get good news. And I mean, we had this one, we were buying this one, guys, when nobody wanted it, when everybody thought the company was going to be broken up, when the DOJ headlines were pretty much every single week, sometimes even twice per week. People were saying Google search is done. They'll have to pretty much break up the company. They'll have to sell off Chrome. People were saying, well, I mean, they're having their lunch eaten by the LLMs like ChatGPT and whatnot. Well, a few weeks later, and here we are, right? A couple little quantum computing news from Google, a couple little AI release headlines with some Gemini updates, and here we are. Everybody loves Google again. Now everybody wants to buy up here when none of the news from the DOJ has changed at all, right? It's not as if they dropped the case. So, I mean, I was buying Google down here, not because I didn't believe in the DOJ lawsuit, because I believed in Google being a very strong company that puts out cutting edge technology all the time. And now hopefully people realize that. So Google is looking extremely strong right now. I do have to say, daily uptrend is clear as day, of course. The higher lows have been set last week at about 191. And what's fun about that location, guys, is it is the previous all-time highs. Now, that's going to be the retest location. So in the event we pull down and lose this move as a whole into daily downtrends with a downswing on the QQQs as well, who's in control right here? It is obviously the weekly bulls, right? Looking very good. Weekly trend expansion would just be looking for a weekly higher low. And at this point, anything above 165, 164, going to be looking for that higher low, back test, and possibly run. So this would be an area where I'll be looking to build a little bit more positions into Google. Look at that MACD cross on the weekly. I don't know if my head is on the way or nothing. Let me just move myself over, giving myself the benefit of the doubt. Look at this MACD cross, 6 months of negative momentum. This is a weekly time frame. You got to pay attention. And I kept saying it, guys. Google at 165 was by far and large the cheapest name, not only in Mag 7 names, but arguably in the entire technology sector as a whole. For the quality of company, for them to trade cheap than the SPY, I mean, you kind of have to buy those, right, guys? Even if there's a lot of uncertainty, there's a lot of risk, kind of have to buy those. Now, moving into Meta. Meta is also looking quite good today, even though they ended only 0.65 to the upside. I mean, the chart is looking quite strong, right? Daily uptrend is clear as day right now. We're going for a little bit of daily consolidation. So anything at this point above 564, looking for a daily higher low for further trend continuation. And if we roll over into daily downtrend, I'll remind you, it's going to open up one of my favorite trades. You guys know the drill, the breakout of the all-time highs, retest, and possibly run. This retest location is prior resistance from back here, 52-week highs. And that location, once again, is 600 down to roughly 580. So if we do pull back into this zone, this would be my next personal buying opportunity for Meta. I do think Meta is very well positioned for 2025. And even the valuation, guys, in that range, I mean, we did it, right? 1.8, 1.9 peg, little bit rich for Meta, but then again, Meta can trade above 2 and nobody would really ask themselves any questions right there. Fantastic net margins, fantastic free cash flow, a ton of buybacks remaining for this stock. Very, very, very solid on Meta and no red flags on the dailies. Moving into Microsoft right now. Well, Microsoft, same concept with Microsoft, right? Everybody wanted to point out, and this is another thing, right? Everybody was pointing out, yeah, but Will, why are you buying Microsoft when it has a massive head and shoulders, right? Massive head and shoulders. And I was saying, the SPY and the QQQs are in daily and weekly uptrends and monthly uptrends too. Do you guys really think that just because there's a head and shoulders pattern here on the weekly time frame, when the Qs and the SPY are going up and Microsoft is improving its fundamentals, it's not as if Microsoft lost any levels, right? They've been improving net margins, improving free cash flow. They have been just improving EPS as a whole. You know, they haven't fumbled any quarters, not that I can see from, right? They keep beating all their quarters. They keep beating all their quarters in terms of revenue as well, up and to the right. So in that case, guys, the company's improving fundamentals. The SPY and the QQQ are going up. What do you think is going to happen? Microsoft's just going to take a 15, 20% dive just because there's a head and shoulders pattern? No, the context matters a lot, right? So, and I would argue NVIDIA is arguably the same right now. So moving into this, guys, daily uptrend is looking very clear in my humble opinion. If we do move lower, looking for a daily higher low at this point in time, anything above 418, just going to be looking for that daily higher low for further trend continuation. Same concept. Microsoft getting a tiny little bit overbought right now on the technicals. You can see daily RSI is clipping into the 70 location. Not truly overbought, but Microsoft doesn't really get extremely overbought that often. If we do pull back, well, you guys know the drill, right? Breakout retest, classic trend continuation trade. Weekly uptrend, very nice, smashing through a big level. So if they do pull back into this green box, it is going to be huge support because it was huge resistance for quite a long time over the course of several periods of this year. So we would be looking for a weekly higher low for further trend continuation. Once again, this level, guys, is 435 down about 425. That is the location I'll be looking to further add to my Microsoft Leap call position, which is doing very well right now since we bought it all the way down here. So it took some time, but now we're making a lot of money. Moving on to Netflix right now. So Netflix continues to kind of, consolidate at the top end of the level right now. Not that bad. The daily higher lows are right here, 902.88. If we lose that level, daily downtrend has started. We will also be losing the 12 EMA, which has been your trend guide ever since earnings. So if we lose that, it has to be notable to you. We will be heading probably a decent amount lower, and we just be looking for a weekly higher low. No red flags on Netflix right now, but any longer term consolidation above 750, just looking for a weekly higher low for further trend continuation. You can see we've been weekly overbought now, 77.80 on the RSI. Usually Netflix does not stay this overbought for this long. You can see, right? Every single time it comes into here, usually it does have a decent little pullback. So we are expecting that pullback, and I wouldn't be surprised if we come down here 850 down to roughly 825. That's going to be the pocket that would make a little bit more sense. Down here is really low, but matching up with 12 EMA on the weekly, which is this location right here, you can argue there's a few candles there as support, few candles here as resistance. You can see it is a contested zone, not the biggest area, but is our next closest area where the bulls can play a little bit of defense. Moving into NVIDIA, the next candidate on the show. Is the head and shoulders going to actually play out or not, right? So NVIDIA, head and shoulders with kind of like a double head here, right? It's kind of weird, but you know, head and shoulders pattern. Everybody keeps telling me, Will, it's a head and shoulders pattern. I mean, yes, it is, but the markets are doing well. Now, if the SPY and QQQ choose to consolidate over the next 2 weeks because they're a little bit extended because of bad data, NVIDIA will come down as a byproduct of overall market consolidation, and people will say, see, I told you so. But they forget the context, right? It's not the pattern that matters. It's how likely is the pattern to follow through depending on what the overall market is doing. So if the market's a little bit hot right now, you saw a lot of big tech names are daily overbought conditions, even weekly overbought conditions in some case. So if the market goes down and NVIDIA goes down with it, it won't be because the prophecy of the head and shoulders is fulfilled. It'll be because of overall broad market consolidation. So just keep that in mind, right? That being said, daily downtrend right now on NVIDIA is quite obvious. Now, 130 down about 125 is the next big area of support. Keep in mind here as well, that is the previous 52-week highs from all the way back there. Should be acting as support. Weekly downtrend right now on NVIDIA, which means we're just going for a little bit of monthly consolidation, right? And there's 2 levels. There's a level I just pointed out, 130 to 125, but if you break through there, the more solid one, in my opinion, is 120 down to 115. So I will be looking to make some plays here, guys, on NVIDIA. If NVIDIA breaks through this level, right, I will be looking to make some plays as a whole coming down into the low 120s. I do have currently 1 position active on NVIDIA, which you can see right here. I have 100 shares. We were assigned at 137. We got a 80-cent credit, and now I'm running some covered calls against them. We got about $1.20. So altogether, we got about $2 in credit, which means our average cost is down from 137 down to about 135. My next DCA will have to be some short puts down there, and this will also be an area where I'm very, very, very interested in going into some leap options with a lot of time, because that will fulfill the monthly consolidation. It will be weekly downtrend at that point with coming into very nice areas of support. And we possibly maybe even getting into daily oversold conditions. Line up all of those things at the same time, and that is a very good recipe for buying some leap options for myself. So that is what I'm going to be exploring. But as of right now, no major red flags on NVIDIA. They're respecting the levels, but just keep in mind, if it does have more further downside, you have to derive a plan. And I just told you guys my plan. Feel free to copy it or not financial advice, of course. But NVIDIA, it's not looking the worst. Yes, it is off roughly 10% from the all-time highs, but the company, just remind yourself of the thesis. We got their earnings. The earnings were fantastic, and 2025 should be a booming year for the company. Now, moving into Tesla. So Tesla, let me just check the time of the video once again. Okay, it's not too bad, 41 minutes. So I don't want to go over much over that because I don't know how long it's going to take to upload on the Wi-Fi, even though the Wi-Fi is good right here. By the way, do you guys like my influencer setup? I put on like the little purple lights and whatnot. I can put them white, so just let me know, guys, if you like my little influencer LEDs behind me there. I can put everything white, or I can put it pink or yellow or whatever you guys want. I don't really mind. Moving on to Tesla right now. So Tesla's looking extremely strong, guys. No secret there, right? Beautiful daily uptrend right now, getting follow through after follow through after follow through. Another 2% in the after hours, 471 in the after hours right now. But daily RSI, guys, is maxed out right now, about 82. But then again, it is Tesla. When it goes on these rallies, it can stay overbought for a decent amount of time. Look how high the RSI can get on the daily. So we cannot even be done at this point in time. The next area of resistance, of course, is 500 psychological. So looking very good. I mean, my long-term shares are loving it, but I do admit I have no positions in this for a short-term swing trade. Congratulations if you do. I have a number of other calls. I even have a list for all of my call options here. It's not as if I'm missing out. We're making tons of gains, but I do not have Tesla calls or anything like that. So congratulations if you do. That being said, looking very good for some uptrend continuation, but in the event that we get the consolidation mode on Tesla, which would be very normal, right? We'd just be looking for a daily higher low for possible further trend continuation. And if we reverse from here, the next pocket that I'll be looking at here, guys, is down here, about 415 down to roughly 385. You may say that it's unlikely to come there, but keep in mind, sometimes, you guys know Tesla can go up 5 or 6% in a day. It can also go down 8-10% on a day. The QQQ is down 2%, right? It's very, very volatile in that respect. That being said, the weekly uptrend is looking gorgeous for the bulls right now. now. And that's why I say any extended consolidation as a byproduct of SPY and QQQ consolidating probably will bring down Tesla as well. And at that point, I will be sitting right there for the weekly higher low, 415 down to about 380, for maybe an even a possible swing trade from that location. Because once again, one of my favorite trades, guys, the breakout of a huge level, all-time highs, into the retest, into further continuation, right? So looking not too bad on Tesla. As a matter of fact, looking gorgeous. Congratulations to all of the Tesla bulls out there, whether short-term or long-term bulls. You guys get a big congratulations from me. Now moving into Palantir. So Palantir had a very rocky start to the morning, right? Very rocky start to the morning. It pretty much gapped down here, around about 6% to the downside. I mean, look how we open, right? From the top of this candle, very bullish open, tons of retail buying, and then you had a little bit of profit taking, right? This really looked like an institutional trap to where they trapped retail, ran down about 8%. A lot of people probably sold the absolute bottom, and then it kind of recaptured everything intraday. So Palantir still as strong as ever right now. No major red flags on this chart as a whole. Daily higher lows are set, looking for the trend expansion, but keep an eye on this guy down here, 68.40. In the event we pull back a little bit more, that will be the daily downtrend. And you notice, guys, we have not really closed below this 12 EMA since we started this rally, since pretty much 40. That will be the big red flag catalyst. If you close a big red candle below the 12 EMA and then close another one below 68.07, right, a sequence of 2 or 3 candles down like this, then you will know daily consolidation is indeed underway with a daily downtrend, and weekly is going to possibly go into consolidation mode as well, which would be very healthy, guys. The RSI on Palantir has been, over 80 for roughly the past 5-6 weeks in a row. So it will look very healthy if we just get a little bit of weekly consolidation like this and then a further move up, right? So that's what I'm waiting for to position more aggressively on Palantir myself, even though I do have long-term shares in the company. No swing shares for me or swing call options right now. Looking for a little bit of consolidation on Palantir. But all in all, the bulls are looking very good. You just kind of have to forget the valuation right now, because the valuation is extreme right now. So it's not trading off its fundamentals anymore, even though it will be expanding over the next 5, 10, 15 years. I have no doubt. That's why I'm holding my long-term shares. In the short term, you kind of have to just focus on the price action, right? As long as you're in a daily uptrend, then you can possibly continue with the positioning, but be very careful. Set the stop losses at the daily higher lows, because I told you guys, if you lose the daily higher lows, it's not going to be very pretty. You're probably going to go in for a bit more consolidation, and it would look just fine on the weekly time frame. So that's pretty much everything for the stock market recap, guys. Let me just see how much we're running at. 45 minutes. All right, let me do a couple more, right? So moving into SOFI. So I'll do the ones that everybody keeps asking me about, right? SOFI, beautiful daily uptrend right now. They have daily upswing, daily downtrend, recapture right there. The weekly higher lows as a result are now set at about 15. So if I'm looking to sell some puts right now, I'm looking to sell some puts at around $15. Right around there, for just to collect some premium, right? In terms of some upside, the upside is looking good through possibly $20. So now that we do have the daily break higher, we have the weekly confirmed uptrend as well with a break higher. I mean, now's the chance to kind of position, right? In terms of going for the swing trade. The stop losses go below your weekly lows, which is about 15, and we're targeting 20. Decent risk to reward, but just understand, kind of like Palantir, right? This is a pure technical move. The fundamentals right now are a little bit overbought. It's a fantastic company, I do admit. And the next big area, as I said, is around 20 all the way up to roughly $22 when you kind of tap into those all-time highs. So looking good. What's the risk reward on this? It's fairly decent, right? If your risk is all the way down there below the lows at around 1480, let's call it, and we're going for about $20 in terms of expansion, I mean, the risk reward is fairly good, right? It says it right there. Let me just move these into target. So you're roughly risking about, let's call it $2, and we're looking to make roughly almost, $3, $4, right? So it is almost a 2-to-1 risk reward. Decent, in my opinion. So for some follow through. So SOFI is not looking too bad at all. Another one that I'm looking at, another one that people ask me for all the time is SOUN, of course. Pure technical trade there as well, guys. It's up like almost 3x. 3x in the last 3-4 weeks. So, you got to be a little bit careful on this positioning. I wouldn't do more than I was willing to lose. If anything, I'd be waiting for a little bit of daily consolidation for the possible expansion. So daily consolidation, I'll remind you, watch for the loss of the hourly time frames. And then when you get the hourly time frame back, that is when you can possibly position, because when you get the breakout like this, you can set the stop losses below the low, and then you can go for the trend expansion. So just be a little bit careful on SOUN. Great technology, great company. But once again, keep in mind, this company right now is a $7 billion company, and I'll show you the revenue that they're bringing in. It's really not that much, right? $7 billion company. Their tech will be used a lot in the future, I will admit. But I mean, look at the revenue, right? Revenue ramp, yes, but even in 2 years, they'll only be making $200 million. It's not enough to justify a, $7-8 billion valuation right now. Just pure short squeeze, pure retail momentum trade right now. So they're not looking too bad at all. And those are the two that I wanted to cover because a few people asked me in the comment section. You can play them, but just play them very carefully. Play the momentum, that is perfectly fine, but not more than you're willing to lose. I wouldn't full port SOFI and SOUN right now. You can do some allocation to them and play them for what they are, momentum trades right now. And that's pretty much it for those. Now let's take a brief look into my portfolio for a few of the trades that I made that I may not have shown you guys. So we went through the full portfolio recap last Friday, so I'm not going to touch into anything other than the ones that I did today. So the AMD ones are still running. Like I said, I am looking for some calls on AMD right now, not looking too bad at all. We're covered up on the Amazon calls as well. In the event that the market pulls back, at least I have some coverage, but you can see the daily gains on the long call are outpacing losses on the short call. So I am covered, and I do still have some very nice gains on my leap right here. So not looking too bad in that respect as well. Most of the calls are doing fairly well. The end phase calls are up 23%. The Google leaps, we're not even going to talk about those. They're up 140%, so looking pretty good. Everything's not looking too bad, right? It's tiny little gains on Intel leaps and IWM leaps as well. The Coca-Colas are still down. The K-Webs that I just opened last week are down about $160. I showed you guys these on Friday. It's an asymmetric bet for the recovery of the China trade. I give myself a ton of time because that's how much time it may take. It may take a ton of time, right? Microsoft bull call debit spreads, I will be looking to close those at the all-time high, 465 on Microsoft. Probably closing an extra maybe one or two there, and then maybe keeping one a little bit further. But we're coming up close to time now. We got about 3 months of time left on these. I opened these about a month ago at this point in time, so I will be willing to hold these one at least into the new year. And if not, if they dip a little bit more, I may reposition for some longer dated ones. The NVIDIA covered calls, we covered those already. Micron leaps are up decently right now. One coming up in June, one for June of 26. Well, I'm just waiting for the rally of semiconductors as a whole, guys. The OXY calls, those are pretty much, they're kind of toast right now. I have until March, so I'll keep these. We made some decent profits on the first batch of OXY calls, but this second one that I kind of left running, it's kind of just lost a lot of value right there. The SMCIs is a new trade from today, so we opened the 27.5 puts on the pullback. 30 cents. So we got roughly 26 cents rather. We got roughly 1%. We're slightly down on those, but I really don't mind being assigned on SMCI guys down there at 27.5. I mean, they're down basically because they got dropped by the NASDAQ. This is the support zone, 29 down about 23. Wouldn't mind positioning a little bit heavier into this one as well, provided I get a little bit more discount. The SOXL calls are finally starting to get some lift, up 11% on those. Square calls, I mean, we've been printing on Square for a long time now, so no secret there. The last one we sold was at $20. I will be holding these guys because I have a lot of time and I'm looking for that next leg up on Bitcoin. So we'll be looking to hold these. The TLT calls are doing terribly, but then again, that was a hedge open back in the month of September in the early October. So normal that the hedge play is not working. I might add to them, but if I do add to them, I'll add to the Junes because these Januaries are pretty much done for. They were a hedge in the event that the market really fell off a cliff. We went into a recessionary narrative. These calls would have done well. And I mean, I'm running like 100K of exposure at any given time, right? So having like 2-3K of exposure for hedges is not the worst thing, right? It's paying for insurance, essentially. I like the TLT trade, but if I do reposition for some longs, it'll probably be the June contracts or maybe even the Decembers for next year. And we still have the Uber trade. Uber, no covered calls because there's no premium there. We have 100 shares. We got assigned at 66 minus some credit, average cost 65.59. And we do have one leap call contract that we bought here as well. I still think Uber is one of the best opportunities in the market right now. I'll die on that hill pretty much, guys. I will not get off that topic. We covered it a few times in the past. The PEG ratio around $60 is 1.02. And if there's any threat of robo-taxis, keep in mind that a lot of robo-taxis will be using Uber's network. The networks of effect of Uber are huge. And robo-taxis, I mean, even though they're about 2 years away in the US from really fully reaching somewhat of a scale, because even though they say scale, it really won't be scale. It'll be small scale, right? Keep in mind, the rest of the world still has not really regulated for them. We're talking about all of Europe, Australia, Canada, so many large countries in Asia as well. And all those countries currently use Uber very heavily. Uber operates in 70 countries, 10,500 cities. So a little bit of Waymo news entering Miami with a small portion of a tiny little fleet, bringing the stock down 10%, and then them getting crushed by more GM news, canceling the autonomous vehicle. Their autonomous vehicle project as a whole, which Uber had a little bit of a stake in as a whole. It's just been bad press after bad press after bad press. And you guys know me, I love buying bad press when the fundamentals of the company do not change, and they will not be changing at least over the next 1 to 2 years. I'll reevaluate the threat of robo-taxis to Uber's network in 1 to 2 years, but for now, I don't really think there's any short-term risk to this business. They should be able to grow really, really well, and I think it's a very decent level right here. Not financial advice, of course, just telling you guys what I'm doing for positioning. So that being said, that's pretty much everything for today, guys. Hopefully you guys enjoyed the video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these Monday through Friday after the close, so hopefully I see you back soon. And we're now getting closer and closer to 5,000 subscribers, guys. Can't wait to hit that milestone. And then we're going for the plaque. We're going for the 100K. That'll probably take maybe a few years, depending on how much of you guys like the videos, of course. But yeah, thank you so much for everything, all your participation, your questions, your likes. Everything has been great so far. Love you guys for that. And lastly, if you have any questions, also feel free to leave them down below in the comments. I'll be answering a bunch of questions tonight, so feel free to leave yours down below. And lastly, in the event that you do want access to the live trades, whenever I do take trades, here are all the trades since the inception of the Discord. As you can see, I'm always very transparent with them as a whole. Wheel trades, call option trades, call debits trades, put credit spread trades, any type of trades, you will find them pretty much in these trade alerts on a daily basis pretty much. And we also do private morning live streams Monday through Friday for about an hour, 2 hours every single morning, where I answer your guys' questions and take trades live. And then again, you can also ask me your questions all throughout the day here, guys, in terms of your stocks, your options, if you want my second opinion. And I'll do some, sometimes some TA, sometimes some fundamentals, stuff like that for you guys. And then of course, lastly, a section they don't talk about a lot, private videos, but a lot of people have been having a lot of success and changing their strategies for the better with these private videos. I go over different option strategies that I don't put on YouTube, trading psychology, how to quit your job type of thing, how to manage wins, how to manage losses. A lot of videos that I don't necessarily put on YouTube, and a lot of people have been finding value from there. And the success channel, I still haven't asked our members, but you can see I get pretty much daily pings in the success channel. A lot of people are doing fantastic in terms of not only just the swing trades and the copy trading. I don't advise copy trading me, but they're there for educational purposes. What you do with them is up to you. But a lot of people have just been finding a lot of value in terms of just repositioning strategy wise and just going into trades with more knowledge and a smarter strategy per se, and kind of limiting the risk and maximizing the reward. So if that interests you, the link is down below in the description of the video for the private Discord. Other than that, guys, I will see you back on the channel. Love you guys. Take care. I will see you tomorrow after the close, and peace.